So, welcome back to the session of financial management.
Good morning, sir.
And we are discussing the unit number 2. Specifically, we are discussing capital structure. So, just the recap of last 2 or 3 sessions, so we'll get the idea. Capital structure, mainly we have two sources, equity and debt. And here, capital structure means a combination or a mixture of equity capital, preference capital, debt capital, long term loans, and retained earning or internal sources. Capital structure is equal to total assets minus total current liabilities, or else capital structure is equal to equity capital plus preference capital plus debt capital plus loans and plus reserve and surplus. Then after we have discussed the what optimum capital structure, a capital structure in which the value of the firm is maximum but the cost of capital is minimum. Then after the forms of capital structure, only equity, equity and preference, equity and debt, equity, preference and debt. Then after we have started the discussion about the determinants of capital structure, there are 17 factors that are affecting the capital structure of the company. One by one, we have discussed number one, financial leverage, number two, growth and stability of sales, number three, cost of capital, number four, cash flow ability, number five, nature and size of firm, number six, control, number seven, flexibility, number eight, requirement of investors, number 9, capital market conditions. Number 10, asset structure. 11, period of financial. Number 12, purpose of financing. And number 13, cost of operation or issue cost. Up to this, we have discussed all the points in detail. Now, moving for the next point, and the next point is all about personal consideration. A personal consideration means the mindset of top management. If the top management in a mindset that they are never go for a debt capital, in that case, only equity and preference are the source. But if the top management is willing to get some loans, to get some other financial benefit from the government or a financial institutes, they may use a debt capital. Acha, all of you have seen the Ram Leela? Yes. I'm not considering a caste system, but just to explain this point, okay? In that particular two castes are there, and out of that one is Rajari. Am I right? So what they are thinking, they are never beg for anything from anyone. वो कभी भी किसी के हाथ से आगे हाथ नहीं फैलाएंगे. आई एम राइट. उनका थिंकिंग ऐसा ही था. So if the same is applicable to the companies, okay, if the same is applicable to companies, it means the top management are in that mindset, in that particular culture, कि वो कभी भी किसी के आगे हाथ नहीं फैला. तो ऐसे केस में they are never using a debt capital, or they are never using a long term loans. Are you agree with me? Getting my point? पहले के टाइम पे देख लो आप, जब हमारे यहाँ किंग थे, राजाओं का शासन था, तो वो क्या करते थे? वो कभी भी किसी के पास से पैसे उधार नहीं लेते थे. वो अपने आप से जो भी होता था उससे मैनेज करते थे, और फिर भी कम पड़ जाए तो वो क्या करते हैं, दूसरे राजा या दूसरा जो प्रदेश था उन पे चढ़ाई कर देते थे. उनका जो भी मिलेगा उससे और फिर अपना शासन चलाएंगे. आर यू गेटिंग माय पॉइंट? So your personal consideration means the mindset of top management. Number 15, corporate tax rule. Right now in India, how many percentage of corporate tax is there? आप कुछ बोले थे. Yes. नहीं बोले. 30%. In India, there is 30% tax rate. Except some economic conditions or some economical areas. Okay. Have you heard the word GIDC? कहाँ पे? Metoda. Is there any speciality? Okay, only industrial area. Is there any specific facility provided by government to the industries? No. You are 50% right, 50% wrong. संभाल के बेटा. चलो. In GIDC, whether it is in Rajkot or whether it is in Porbandar or whether it is in Bhavnagar, whether it is in Dwarka, whether it is in anything in other districts, we are talking about the text, so we'll discuss about only one thing. If any person or any businessman establish their business unit in that particular area, we call it GIDC. In that area, first 5 years are tax free. You are not supposed to pay any tax to the government. Are you agree? Are you clear about this? Okay. So some of areas are there in which the tax is 0. So this is the tax rule. In some of countries, not in India, but in some of countries, the business incomes are tax free. In some of countries, personal incomes are tax free. So in that case, this is the rule. High corporate tax on a profit complies company to prefer debt finance. Why? Now this is the point that we have written in a slide. If the tax is high, on which we are paying the tax? On profit. So generally what happens, if the tax rate is high, then company try to show minimum profit. You getting my point? Yes. अगर टैक्स ज्यादा होगा तो हम क्या बताएंगे कि हमारी इनकम कम है, हमारा प्रॉफिट कम है. So in that case, we use the debt capital. But on a debt capital, whatever we pay, it is considered as expense. But if we use equity capital, it means the dividend, and dividend is a part of profit. So your profit will be more, and your tax will be more. Are we clear about this? Okay. 16. Risk. Already we have discussed initially, there are two types of risk. Number one is business risk and number two is financial risk. Business risk means a risk related to business and which company does not have any control, like as a government rules, like as a weather conditions, market conditions, international market conditions, share market conditions, depressions and inflations. Are you getting my point? Taste and preference of the public. So these are the risk factors, business risk factors. Financial risk means risk created while using the debt capital. Why there is a financial risk? Because company using the debt capital. As a company use the debt capital, it means company need to pay some fixed return to the debt capital. Suppose 5% loan is there, it means company need to pay 5% to the bank every year in respect of profit, and so that's why there is a financial risk and business risk. So if the business risk is more, companies are generally preferring equity capital. Okay, and if the financial risk is somehow manageable, then company prefer a debt capital. Otherwise, again, company go for equity and preference. Are we clear about this point? And last one, competition. Read the slide and try to understand. And then tell me any input from my side. It's so simple. If the competition is high, more than company use more equity and less debt. And if the competition is very low or no competition is there, then less equity and more debt. So are we clear about this? So there are 17 points, 17 factors that affecting the capital structure of the company. Now you need to remember any 8 or any 4. For 4 marks question, we will write minimum 4, maximum that up to you. And for 8 marks question, we will write 8 points, maximum to you. Chalo. So be clear? Shall we move ahead? Okay. Now see. Theories of capital structure. Write down the title. Theories of capital structure. Okay. Now tell me one thing. Which system is better? Android or iPhone? iOS. Which one is better? iOS or Android? I or A? Okay, how many? 1, 2, 3, 4, 5, 6. And remaining 6 are say that Android. Okay, Sahil said Android. What about others? Yes, Android. Okay, Nishit, iOS. अच्छा आपका क्या है? एंड्रॉइड कौन एंड्रॉइड है? यस अब इसमें तो ऐसा है कि जिसने कभी एंड्रॉइड सॉरी जिसने कभी आईफोन यूज ही नहीं किया उसको पता ही नहीं होगा कि iOS है क्या. Okay, somehow we have basic knowledge. I know that we have knowledge that iOS is this, but we have not used, so we can't say that this one is better and this one is better. Now the point is only this. Now here, both the systems are capable to satisfy the customer. Okay, both the systems are capable to satisfy the customers, but some people have a different opinion, some people have different opinions. Same is applicable to here. Now coming to the subject, theories of capital structure means some experts are there in a financial management, and out of that experts, some of are saying that if you change your capital structure, it means if you change the proportion of equity or proportion of debt, it will affect the value of the firm. Are you getting my point? The first viewpoint, the first, type of experts, they are saying that if the company change the capital structure, then it directly affects the value of the firm. On the other side, the others are saying that no, if you change your capital structure, if company change the capital structure, it doesn't affect the value of the firm. Are you clear about these two criterias, two views? One is it affect the value of the firm, it does not affect the value of the firm. So on the basis of this view, we can divide this capital structure theories in two categories. Number one is relevant theory. Relevant theories. And number two is irrelevant theories. Now relevant theories means what? Those have a point of view that if the company changes the capital structure, it will affect the value of the firm. It means there is a relation between capital structure and value of the company. Are you getting my point? There is a relation between capital structure and value of the firm. And irrelevant theories say that there is no relation between capital structure and value of the firm. Are we clear about the background? Okay. Now moving ahead. So there are 4 types of views are there. Net income approach. We will discuss later on one by one. So don't write, just write down the first one only. Net income approach. Number 2, net operating income. Number 3, approach. And number 4, traditional approach. Let's start number 1. First approach is net income approach. This approach was suggested by Durant. पूरा नाम है डेविड डूरंट. डेविड डूरंट. This approach was suggested by David Durant. That may be asked an ancient question or 1 month question, that NI, net income approach, was suggested by ... You need to write the name. Here? Okay. Now see, according to this approach, the capital structure decision is relevant to the value of the firm or valuation of the firm. It means this is the first category that we call relevant theories. This theory is known as relevant theory, and according to this theory, there is a relevance or a relation between capital structure and value of the firm. You can see the next line. There is a relation between capital structure and value of the firm. And now the key word or key line of this theory. ये जो नेक्स्ट की 2 लाइंस है वो इसका हार्ट. अगर ये समझ में आ गया तो पूरी थियरी समझ में आ जाएगी. नाउ रीड इट केयरफुली. रीड इट केयरफुली. According to this approach, use more debt finance. क्या यूज करना है? Debt. Use more debt finance to reduce the overall cost of capital and increase the value of the firm. The line is clear. As a company use more and more debt capital, the overall cost of capital will decrease, and as the overall cost of capital decrease, the value of the firm will increase. Okay. Now you remember the last point. One terminology we have understand, and that terminology is optimum capital structure. आपको याद है? Optimum capital structure, a capital structure in which cost of capital is minimum but value of the firm is maximum. The same is applicable here. Are you getting my point? So here cost of capital will reduce, it will minimize, and as minimize, the overall value of the firm will increase by using more debt. And now vice versa, if a company use less debt and more equity, it will increase the overall cost of capital and it will decrease the value of the firm. Are you getting my point? Let's take an example. XYZ company is there. Okay, in XYZ, we have equity shares of rupees 5 lakhs. Okay, and dividend rate is suppose 20%. How many? 20%. So कितना होगा यहाँ पे dividend? 1 lakh. दिखाई दे रहा है ना वहां से? Okay. Now, suppose next company have debentures for rupees 5 lakh again, and rate of interest is 10%. 50,000. So the total capital of the company is 10 lakh, and cost of capital is 1,50,000. Are you getting my point? 5 lakh for equity shares and 5 lakh for debentures. On equity share 20% dividend, it means 1 lakh dividend, and on debentures we have 10% interest, so 50,000. So overall or total cost of capital is 1,50,000. Now apply this rule, apply this theory. According to this theory, if company use more debt, suppose in the new structure of the company, equity capital is only 2 lakh. 20%, how many? 40,000, and here 5 lakh to 8 lakh. How many? 1,20,000. This capital remains in. Are you getting my point? As a company use more debt capital from 5 lakh to 8 lakh, the overall cost of capital will reduce by 30,000, and as overall cost of capital reduce, the value of the firm will increase. Are we clear? Okay. Moving ahead. Acha, have you studied the economics? Yes. There is one law of demand. Yes. Uh, can you tell me that law?
When price is high, demand is low. When price is low, demand is high.
Okay. Okay. Is there any other conditions? हाँ वो मैं समझ गया कि अगर if the price will increase, demand will fall, and if the price will fall, demand will increase, but some conditions are there that you need to fulfill. याद है किसी को? रूल तो सभी को याद रहता है, वो कंडीशन किसी को याद नहीं रहती. The first line of that rule is started like this: if other factors remain same or constant, if the taste and preference, if the market condition, if the government policies, if the economical factors, if the environmental factors are remain same, then and then this rule is applicable. Similarly, this rule, this theory is applicable, or it is based on some conditions, and that conditions are known as assumptions. If these conditions, these assumptions are fulfilled, then and then this theory is applicable. Now read one. There is no corporate tax. No corporate tax. Number 2, cost of debt is less than cost of equity. Number 3, use of debt does not change the risk perception of investor. It means the risk and risk perception remain same. Total capital requirement of the company is given and remain constant. Last one, KE and KD. KE means cost of equity capital, and KD means cost of debt capital. Now we summarize this all the assumptions in keywords. Okay, no corporate tax. Number 1. Number 2, cost of debt is low. Number 3, no change in a risk remains same. Number 4, capital requirement remains same. And number 5, KE and KD both are remain same. Okay, एक बार वापस से क्विकली देख लो, याद रख लो इसको, क्योंकि मैं इसको वापस से रिपीट करूंगा नेक्स्ट थियरी में, तो मैं आपको पूछूंगा कि क्या सिमिलरिटीज. Again I repeat, 5 are there. Okay, just read out and try to remember the keywords only. Done? Okay. Moving to the next part. Whatever I have explained here in terms of number, we can understand with this diagram. This is the diagram. मेरा drawing इतना भी अच्छा नहीं है. Okay, I'm sorry for that. चलो. Now here, this is the written. This is written, and this is cost of capital or debt or equity, whatever you call. Okay. Now see what happens. Companies are using a debt. It means a debentures, and it's having how many percentage? 10%. Okay, 10% return test, 10% cost is there. Now this equity is suppose here 20%. This is our equity. You're getting my point? Right now company is there. Suppose this is 1, this is 0 here, 5, 10, 15, 20 and 25. This is the total capital of the company. Lakhs, 5 lakhs, 10 lakhs, 20, 15 lakhs, 20 lakhs, 25 lakhs. Okay. Right now, how many capital? 10 lakhs. It means somehow here. Okay. If company will increase this debt, here we have debt, here we have debt. इसको मैं इस तरह से कर दूं. अगर ये यहाँ से improve होगी कहाँ तक? Up to the 8 lakh, up to this one. So what happened? By using the more debt capital, your cost of average capital will reduce. Are you getting my point? क्लियर है? यहाँ पे जो इक्विटी की कॉस्ट है वो धीरे धीरे डिक्लाइन है. The same is written here, RA. Okay. Some other terms are there. See, RE, it means return on equity. RA means return on average capital. RD means return on debt capital. So are we clear about this diagram? Number one, theory, lines, 3 lines, 5 assumptions, a diagram, and last one. इसको छोड़ दो, इसको याद रखो, वो इतना इंपॉर्टेंट नहीं था, ये इंपॉर्टेंट. The market value of the firm is equal to total market value of equity plus total market value of debt. So there are 4 different elements in this theory that you need to remember. Number one, theory, assumptions, diagram, and form. If we have question for 8 marks, we will write these 4 points, including the diagram and formula. If we have question for only 4 marks, then we write only theory and assumptions. No need to draw the diagram or no need to write a formula. But I suggest that whether it is for 4 marks or whether it is for 8 marks, it hardly take 1 minute to draw this both, to write a formula and to draw the diagram. So are we clear? Okay. ये हो गया हमारा first view. Now the second view. Write down the second theory. अगर आपको फर्स्ट समझ में आ गई ना तो ये क्विकली समझ में आ जाएगी. अगर आप फर्स्ट में क्लियर हो तो ये दूसरी वाली तो ऑटोमेटिकली समझ आ जाएगी. Okay. Again, this theory was given by David Durant. दोनों ही theory David Durant ने दी. This theory is called net operating income, shortly we known as NOI. Please also remember the full forms. NI stand for net income and NOI stand for net operating income. This theory or this approach is opposite to NI, net income. It means NI is relevant to theory. This theory is irrelevant to theory. And once it is said that it is irrelevant, it means there is no relation between market value of the firm and cost of capital. According to this theory, capital structure decision is irrelevant to valuation of the firm, and the market value of the firm is not at all affected by the capital structure changes. Whether we change this one or whether we change this one, instead of 2 lakhs of or 5 lakhs of equity, we are using 8 lakhs of equity, or whether 5 lakhs to 8 lakhs or 5 lakhs to 3 lakhs, it does not affect the value of the firm. कैपिटल स्ट्रक्चर में कुछ भी चेंज करोगे, इक्विटी का प्रोपोर्शन बढ़ाओ या डेब्ट का प्रोपोर्शन बढ़ाओ, इक्विटी कम करो या डेब्ट कम करो, उससे फर्म की मार्केट वैल्यू में कोई चेंज होगा नहीं. लास्ट वन. नाउ दिस इज द अगेन पार्ट ऑफ दिस थियरी. इसको याद कर लो तो थियरी याद रह जाएगी. अकॉर्डिंग टू दिस अप्रोच, the change in a capital structure will not lead to any change in total value of the firm and market price of shares as well as overall cost of capital. Acha, now tell me, the equity owners are also known as? They are the shareholders, my God. Yeah, owner of the companies. Okay, why they are called as the owner of the company?
They have some
They have some rights. Number one. Number two. Number two. Yes. Okay. One point is more missing. मैंने पहले भी बोला था कि अगर रिस्क है तो okay, so they are bearing the risk. Now coming to this entire concept. If the equity shareholders are considered as owners, it means they are bearing the risk of the company. So what happen if company will increase the debt capital? Okay, if the company will increase the debt capital, and as a debt capital will increase, which risk will increase? हमने देखा था दो टाइप के रिस्क है, उसमें से कौन सा रिस्क बढ़ता है? Financial risk. Are you getting my point? Once the company issue the more debt capital, the financial risk will increase, and as a financial risk, it means the risk will increase. The shareholders, specifically equity shareholders, are demanding more return. Are you getting my point? जैसे जैसे रिस्क बढ़ेगा, इक्विटी शेयरहोल्डर्स एक्स्ट्रा डिविडेंड की डिमांड करेंगे. तो अल्टीमेटली व्हाट हैपन, you have saved your 30,000 rupees, that will compensate by you. Instead of 20%, you need to pay 25% of dividend. You need to pay 30% of dividend because risk is more and they are demanding the more dividend. Are you getting my point? So according to this theory, if company use more debt, it will increase the risk perceptions of investor, and as the risk perceptions of investor, equity shareholders are increased, they are demanding the more dividend. So what happened ultimately? The benefit that we derive from the use of more debt capital is compensate again the return to equity shareholders. So ultimately, overall cost of capital remain same and market value of the firm remain same. समझ में आया? ओके, अच्छा ये तो मैंने गलती से कर दिया. नाउ रिमेंबर दिस those 5 assumptions of NI approach. याद करो उसको एक बार. नंबर 1 क्या था? नो कॉर्पोरेट टैक्स. ओके, look at to this. Look at to this. Overall cost of capital remains same. Okay. No corporate tax. One make हो रहा है. Okay. Number 2, KD. Cost of debt remain same, constant. Number 5. Sorry. 4. K. It's KE. It's KE, not K. It's KE. Cost of equity capital remain same. तो 3 components same हो गए. No corporate tax. Cost of equity remains same. Cost of debt remains same. Overall cost of capital remains same. Now coming to next, the firm capitalization, total earning of the firm, to find the value of the market as what? It means whatever the company earn in terms of profit, that all the profit is reinvested in the business. 100% retention, 0% dividend. Are we clear? And last one, मैंने आपको एक्सप्लेन कर दिया, just read it. मैंने आपको अभी एक्सप्लेन किया है. Are we clear? As a company use more and more debt, the risk perceptions of investors will increase, and ultimately it will increase the cost of equity capital. So ultimately, the cost of debt will reduce and cost of equity will increase. So ultimately, overall cost of capital remain same. Condition number 1. Here is clear? Clear है? ओके, यहाँ पे देखो 4 पॉइंट्स कॉमन है दोनों में. So at least in mid one or in a final examination, this any one theory will ask, you can easily write this 4 assumptions. Okay, तो हमने एक तीर से 2 शिकार किए. ओके, एक ही हमें याद रखना है और दोनों में लिखना है. कमिंग टू द नेक्स्ट, assumptions हमने देख लिए. क्विकली इसका डायग्राम भी देख लेते हैं. I don't think so there is a requirement to draw this diagram in a board. It is crystal clear that if the company is more debt capital from this point to this point, the overall cost of capital are remain same, but as a company use more debt, the cost of equity will increase. Are we clear? दोनों में डिफरेंस क्या है कि यहाँ पे ओवरऑल कॉस्ट ऑफ कैपिटल रिड्यूस हो रही थी, इसीलिए यहाँ पे मार्केट वैल्यू इंक्रीज हो रही थी. यहाँ पे तो वो हो ही नहीं, कांस्टेंट है, तो मार्केट वैल्यू भी कांस्टेंट रहेगी. आर वी क्लियर एवरीवन? ओके, आज के लिए हमारा लास्ट पॉइंट, द फॉर्मूला ऑफ दिस थियरी. RE, it means cost of equity, is equal to RA, overall cost of or average cost of capital, plus in bracket average cost of capital minus cost of debt, bracket over, in a second bracket D upon E, market value of debt upon market value of E. See, we does not have any practical question from this theories. Okay, we does not have any practical questions from this series. Formulas we are trying to remember to complete the theoretical portions. Otherwise, we are not using these formulas for practical questions. चल, नहीं वो मैंने पास किया है. Any doubt, any query? Okay, so we have discussed 2 theories, and the next class, the remaining 2 theories are there. Okay, MM theory and traditional theory. We will discuss that theories in the next class. If you have any queries, any doubts, or anything to share, please share. Otherwise, write your enrollment numbers, and you are free to leave the class.